So the other day, I received an email from Robinhood, and I'm sure a lot of you guys did too, because I know a lot of my viewers use Robinhood. But I got this email from Robinhood telling me about a new IPO, a new stock IPO that will be happening later this month for a jewelry company called Brilliant Earth. And at first glance, I was like, the heck is Brilliant Earth? Is this like an environmental company? Or like, what do they do? I just, I saw the words Brilliant Earth and I immediately thought maybe it's some kind of environmentalist company or something. But no, this is, I started to actually do a little bit more research on them because I was just out of curiosity. And it turns out that this is a pretty interesting stock. First of all, this is a company, a jewelry company that primarily targets millennials and Gen Zs. So they go after young people and they market themselves as a more kind of ethical and sustainable jewelry alternative to some of the other kind of legacy options out there, some of the legacy jewelry companies that have bad reputations with bad mining practices. I mean, I'm sure you guys have heard of like conflict diamonds and all the shadiness that goes on within the jewelry and diamond industries and all that kind of stuff. So they kind of market themselves as a more kind of ethical alternative to that. And they go after young customers that spend a lot of time on social media and that tend to care about those kind of social, issues and stuff like that. So that's where they get their business primarily. And so far, it actually looks like it's working out for them because not only are they a high growth revenue company and they're starting to really steal market share within the jewelry industry, but they are also profitable, which is pretty rare oftentimes for young companies and ones that are barely IPOing. They're actually profitable by millions of dollars. So this is turning into a pretty interesting stock. I thought, look, a lot of my viewers probably got an email from Robinhood too. They're probably wondering what this company is and if it's worth taking a closer look at. So I thought, why not make a video and we'll talk about their financials. We'll take a look at their future potential. We'll see how they're doing within the industry. Are they actually disrupting the jewelry industry? By the way, this is a company that sells primarily online, which is also a new kind of disruptive thing for the industry because jewelers for a long time have basically made the majority of their sales through brick and mortar retail and shopping malls and stuff. But now we're heading into a future of e-commerce and online shopping. And this is a company that is going all in through online shopping. So they're trying to target those young customers, get them through social media, get them to buy stuff through their website and market themselves as an ethical option out there that aligns with maybe younger people's ideologies and things like that. So anyway, it's an interesting stock. I thought we should take a closer look at it. I'm going to let you know if I think this stock is a buy on the IPO. Of course, I will let you know if I plan to buy this stock myself, which will be happening later this month for the IPO. And it's just going to be a fun one overall. So I hope you guys enjoy this. Hit the like button if you do. If you want me to do this with other upcoming IPOs, make sure you let me know as well. But let's go ahead and take a closer look at this one. Well, as far as the business goes, Brilliant Earth describes themselves as a digital-first jewelry company that is seeking to disrupt an outdated industry by transforming it into a more transparent, sustainable, and compassionate one. And there's basically two ways that they aim to do this. The first is kind of on the ethical side of things, so by sourcing their diamonds and jewelry in more sustainable ways than the competition, as well as targeting younger customers by supporting social causes that they think will attract them. And then the other is on the more kind of business side of things, which is to disrupt the market by primarily selling their products online, which we know is also where most younger people spend the majority of their time these days, unfortunately. So anyway, to give you some examples of these things, on the ethical side, they're a certified and audited member of the Responsible Jewelry Council, which is the leading ethical standard within the jewelry industry. They strive to use 100% recycled precious metals to lower their footprint and the negative impacts of metal mining, and basically make more sustainable jewelry by using a combination of real diamonds as well as cheaper lab created ones. And they even use blockchain technology to provide tracing of a diamond's origin and ownership to give more transparency on the entire process, which is pretty interesting there. Using blockchain technology is kind of cool. Anyway, on top of that, in their mission statement, they note that a whopping 83% of millennials and Gen Z customers buy from brands that share the same values and opinions as them, which, by the way, those same younger generations make up almost 90% of Brilliant Earth's customers. So, by far, all their customers, these are young people. And so, what Brilliant Earth does to attract them is they donate to special causes that they think young people will be passionate about, and they try to market themselves as a more inclusive company that focuses on diversity and equity and all those kind of buzzwords that young people are usually super into, especially on social media. Speaking of which, social media is the biggest way that they advertise to them, as they've already built up a very large presence with over 9 million monthly Pinterest viewers, over 2 million monthly Facebook followers, and over 700,000 Instagram followers as well. Now, the other way that they intend to disrupt the market is by going all in on a direct-to-consumer and custom personalization e-commerce experience. And I'll explain what all of this means, but just breaking down their business a little bit, as far as their products go, it's basically everything that you would expect in the jewelry market, from necklaces and earrings to bracelets and rings and more. And as far as I can tell, they do have some showrooms to actually show off some of their products and explain to potential customers everything they do, but it looks like there's only around 15 of them spread throughout the US, while the vast majority of their business is actually done online through their website. And what's cool about them is that they also offer customization options where you can literally choose different colors, carats, cuts, clarities, metals, prices, and so on. Speaking of which, in terms of pricing, I mean, you're definitely going to pay a premium for their more kind of sustainable fine jewelry. But some stuff is a little more affordable too, and like I said before, they even sell some cheaper lab-created diamonds as well. But overall, I mean, just kind of looking at their diamond bracelets page here, you have a range from as low as like $100 to as much as like $6,000. But they do say in their prospectus that the average order value is typically over $3,000. So definitely, not necessarily cheap, but it just kind of depends on what you're buying. I mean, one of the cool features that I saw on their website is that you can go on there. One of the cool things you can do is you can filter the search results based on most popular gifts, and you can look at gifts within a certain price range that are popular among customers. And so that way you can find stuff that is a little bit cheaper and within your budget and that is also popular. So it kind of makes it easier. So through their online store, you have some kind of cool features and some easy ways and cheaper ways to find the right product that you're looking for, and it just kind of makes it easier. And of course, you don't even have to leave your house. You just shop right there online and have it shipped to you. So all those kind of different methods of doing business for Brilliant Earth, they feel will make them a disruptive force in the industry and in the space overall. So let's talk about how true that is. Let's take a closer look at the market. Let's see how they're doing within it. And let's also talk about that IPO, and let's see if they're worth investing in long term. Well, according to Euromonitor, the global jewelry market has grown by over 7% a year over the past decade and has likely now surpassed over $300 billion, with over $60 billion of that coming from just the United States alone. To give you some context, Brilliant Earth only did about $200 million in 2019, so around a $300 billion market with a B, and then Brilliant Earth only did around $200 million with an M, so you're talking gigantic room for growth there. And that's exactly what they've been experiencing, and at a much higher rate, by the way, than the rest of the market too, meaning that they're probably doing a pretty good job here of stealing market share from the legacy players. Over the past 5 years or so, their sales have grown by over 30% on average, and more recently, in the past 6 months, they skyrocketed by close to 80%. So the growth is definitely there. This is by all accounts a decently high growth company. What's interesting though is that usually when we see a high growth younger company like this that is trying to disrupt a huge industry and is barely going public in the stock exchange, a lot of times those companies tend to be losing huge amounts of money. But in the case of Brilliant Earth, they're actually profitable, as they improved from a loss of almost $8 million in 2019 to a profit of over $21 million last year. And that success seems to be lasting, as they have also been profitable through the first 6 months of this year as well, at almost $11 million. Plus, pure cash flows from operations are even better, with 2019 seeing a profit of over $500,000, 2020 growing to over $26 million, and then in the first half of this year they've already done over 20 million as well. So if you double that for the rest of the year, you're talking over $40 million for this year alone, which is huge growth on those profits. And all of that directly helps their balance sheet too, which is super important for younger companies. But when looking at this, after the IPO, Brilliant Earth should end up with even more cash than all of their liabilities combined. That is super impressive. So add it all up, and yeah, Brilliant Earth definitely looks like they're headed in the right direction. But how does that translate to the stock and the IPO and the valuation? Well, I was taking a look at the Robinhood early IPO access feature that lets you buy a stock at the initial IPO price at the same time as all the big institutional investors. And as it stands, it's looking like they're aiming to IPO somewhere between $14 and $16 a share on the 23rd of this month here in September. And at that price, Seeking Alpha estimates that they'll have an enterprise value of about $1.3 billion, which when we do the math, that comes out to what I consider to be a pretty fair valuation. I mean, even if we use last year's sales, which we know are growing at a pretty high rate, their price to sales ratio is about 5, which seems pretty fair to me. Because you give that a few years and it should come down fairly quickly, I would assume. Also, their growing sales should only strengthen their profits. And if we input last year's net income, we get a price to earnings ratio of about 60, which is obviously very high, but they're profitable, and PE ratios for younger companies can fall super quick once they get the ball rolling. I mean, we could potentially see triple-digit earnings growth in the future, and something like that would literally cut the PE ratio in half or more. So I think it all just depends on how well they execute and how disruptive they are in the market, which I think they have a great shot of doing. I mean, if they continue to advertise on social media, keep attracting all of these younger customers who will grow older and continue to buy more from them, it'll increase their brand popularity, and they'll continuously be bringing in more and more young customers. That's why people always companies, corporations, they always talk about the key demographics. You always want to go after those young customers, because then you can kind of have them for life, and then you can keep replenishing that with more young customers. So young customers is always a big deal in the world of business. And the thing is also that a lot of these legacy players, they still rely on a lot of brick and mortar. They still rely on shopping malls. I was at the shopping mall the other day. There's a huge one near where I live, one of the biggest in the country. And I went to it and I was shopping around, and it was like everything there was jewelry stores. It's like the only thing left, because all the other businesses are realizing that they just can't make money in shopping malls anymore, which is a horrible thing. I'm very saddened by it. I love shopping malls. I love to shop at brick and mortar. I am not a fan of the whole like e-commerce digital trend and transformation that is happening to the economy, but it's inevitable and it's the reality that we live in, and at some point you have to just accept it. And so, but a lot of these jewelry companies are still in those shopping malls because they rely so heavily on them. And they're these legacy players that are kind of slow to adapt. And of course, a lot of them are also adapting and launching online shopping. And there is a lot of competition in the space. But Brilliant Earth, it does look to me like they're one of the ones that is kind of the first, has a little bit of a first mover's advantage. They're going all in on e-commerce, on online shopping, and that may help them disrupt the industry a little bit more as well. So everything that Brilliant Earth is doing, to me, makes absolute sense, and they'll probably have a lot of success within that if they're able to execute. Still though, I just have a few issues that kind of prevent me from buying the stock myself, and I guess I would say that the biggest one is that I'm just not that excited about the jewelry market. I mean, I do like watches. I'll buy something on occasion, but it's not something that I actively track. As far as, like, for example, I'm really into the tech industries and tech markets, like gaming and stuff like that. I mean, there's other stuff that I track a lot more closely. When it comes to jewelry, I don't really pay much attention to it at all, and it is a market where I think there will be a lot of competition. There's also a lot of big, heavy legacy players that will probably throw a lot of money at this so that they don't lose market share. I still think Brilliant Earth will probably do well long term, because it already seems like they're stealing market share, and that might just continue to grow. And I think they're doing a pretty good job of advertising themselves to young customers, which is a big deal. So My gut tells me that I probably should own this stock, but I'm just gonna stay out of it. I have a personal kind of investing principle that if it's not something I'm very passionate about, if it's not a company I'm passionate about, if they don't have products or services that I really care about, if I don't use the products myself, if I don't participate in the market myself very much, then usually I'll stay away from those stocks. I mean, there are exceptions. I will still buy it if I think it's a great value, but this isn't something where I think like, oh, I have to go out and buy it. In fact, because I'm not that passionate about it, I actually have a pretty good option here, which is to just kind of sit back and see what happens first. And what I mean by that is that if the stock was to take off and I don't buy it and I'm just kind of sitting on the sidelines and the stock takes off, well, who really cares? Because I wasn't that passionate about owning this company anyway. So who cares if it takes off? If it takes off, whatever. I move on, I go to a different stock. There's plenty of other stocks out there that I love. But if the stock crashes, if the stock drops, because I do think it's going to be a volatile stock, and if it does happen to crash or drop, then maybe that price does get to a level that is super attractive. And then maybe I'm like, well, it's looking pretty good now. Maybe I should just buy it, track it more closely, do more research, stay more up to date with the jewelry market, and try to own this stock long term. So maybe in that scenario, I do actually end up buying it. But for now, I think I'll be staying on the sidelines. I do consider it a little bit more of a riskier kind of speculative stock. There's not a lot of history to go off of. We're still kind of trying to speculate and predict where they'll head in the future and how disruptive they'll be. And when it comes to riskier kind of speculative stocks, there are others that I do like more, at least right now. Like, for example, I really like Teladoc Health. I've been buying a lot of that one. I like Robinhood. I mean, I like Zynga Gaming. I like Duolingo. There's a lot of other kind of speculative stocks that I've been adding to my portfolio. So, I don't really want too many risky stocks in there. And this is one that I'm just kind of 50-50 on. And because I'm just 50-50 on it, I think I'll just stay on the sidelines for now. I'll let it IPO. I'll wait to see what happens. If it takes off, no big deal. If it crashes, I might actually pick up some shares. And if I do, I'll be sure to let you guys know. So make sure you're subscribed for that. But thanks for stopping by, everyone. Let me know what you think down below. Is this a stock you're picking up? Is it one that you're not that interested in? Let me know. And if there's any other videos you'd like to see, let me know that as well. But thanks for watching the video. Please hit the like button if you enjoyed it. And if you'd like me to do more videos where I talk about upcoming IPOs, let me know that as well. But anyway, thank you. Hope you're all doing well. Take care. Bye-bye.